Good morning. I hope you guys are doing good. Um, so let's talk about, or let's just have a conversation with regards to CPI, right? So keep in mind that today is CPI at the usual time. Um, I didn't check the time, but most definitely around uh, 2:30. Most definitely at around 2:30 South African time, right? And if you remember yesterday's um, live stream, I was actually just talking about gold as well to say that um, if you looked at gold from yesterday's perspective, we actually needed some confirmations on a 4-hour time frame. And when I was actually looking at a 4-hour time frame, if you can definitely still remember yesterday, I think it was around 4 p.m. I think 4 p.m. afternoon South African time. When I went live, I was mentioning that there was a so I think if I do the calculations properly, would be one, two, would be approximately the third candlestick from the recent candlestick, like the third 4-hour candlestick from the recent candlestick. If you go and look at that candlestick, um, that the one that gave us a huge reversal from yesterday, as I was mentioning that if had it actually closed above that previous high, yeah, a person, yes, this is live. Yes, this is live. The CPI prediction is going to be at around. It's approximately. Let's see. This is right now 7, so it means we have 7, 8, 9, 10, 11, 12, 1, 2. So we are left with 7 hour 30 minutes until. So right now I'm just giving you guys the predictions. My what I actually uh, think it's possible based off structural confirmations that I was just looking at and how I trade and how I follow my principles in trading, checking possible prices that could be reached. So um back to what I was saying from yesterday, I was actually having a conversation. I went live here on YouTube as well, mentioning the possibilities of if we were to look at the price on gold to buy, why would we do that? But unfortunately, not even unfortunately, fortunately, that did not happen. Instead, from that structural confirmation, we had a rejection. So for the fact that we were looking at a rejection on a 4-hour time frame, that gave us the edge to be looking at selling opportunities, taking us to a daily time frame structure. Because obviously, we must keep in mind that we want to trade um, this news release on a smaller time frame perspective, so that we can capitalize on targets and everything like that. So looking at the fact that the 4-hour time frame did actually didn't confirm to the structural confirmation that we were looking for, because we were looking at, if you go and look at the third candlestick from the current 4-hour recent candlestick, you can you will definitely be looking at a candlestick or a 4-hour candlestick that gave us a rejection yesterday. So that it's a long candlestick that actually gave us a rejection. So that long candlestick yesterday, we were waiting for it to actually close above the previous candlestick before it, right? So unfortunately, it did not, right? So the fact that it actually, we can't say it failed, but we would have to just use the term language that's more understandable. The fact that it didn't actually close above that previous high gives us an edge to say that then gold does not have any buying pressure. Obviously, if you look at the daily time frame, there was some if you were to look at like a daily time frame, it was giving us the impression that we could possibly be looking at a retracement back to a 50% area of the whole drop since the highest high. But now if you look at that and you take a look at the 4 hour time frame, the 4 hour time frames that the daily time frame doesn't have any buying momentum to be holding any retracement of some kind. So it means that today we need to be taking advantage of the fact that when Asian session ends, we need to be looking at drops, because obviously going into London, that's where the market will definitely be indecisive because uh, uh, um, what's this because CPI will be just around. So we need to capitalize on the drop right after Asian session. So for the fact that Asian session will definitely just be giving us a confirmation, because one thing you must understand with gold is this: if you fail to actually get the right confirmation of like a daily setup before Asian session, you should just forget about it, because obviously on gold you have two setups a day. According to my principles, you'll have your first setup during Asian session, and then you'll later on have your second setup at around New York, right? So if you fail to get a setup that could possibly play out from Asian session into the late hours of London, then you just have to forget about it. That's why it's much more easy, not even easy, it's much more safer to actually be looking at a setup currently, right? So if you are looking into not necessarily being considerate of entry wise, you have enough margin to go in on trades and just let the trades run as they are. um, I was looking at it has to be 15 minutes and 5 minutes if I'm not mistaken. If you go look at the 15 minutes candlestick, the 15 minutes time frame structure right now, you would see that we do have a sort of like a head and shoulder. Uh, is it head and shoulder or inverse head and shoulder? One way or the other. It's either the a head and shoulder, right? It's actually a head and shoulder, not an inverse, because an inverse is downwards. So if you possibly look at that 15 minutes and 5 minutes, you'd see that we do have an inverse head and shoulder pattern. And for the fact that we do have a head and shoulder pattern, that also gives us sort of like a structural confirmation to say that the possibilities of gold currently giving us those early sells, giving us a daily rejection. Because keep in mind, if we have a daily rejection from gold in the current hours going into London session, it's gonna be easier for us to hold trades into CPI, because I would hate to be looking into trading CPI initial movement by entering exactly on the dot. So it's easier for me to actually uh, be right than to be wrong exact at an exact moment. So it's easier for me to be wrong by having an early setup and then it doesn't play out. Then I'm I'm willing to accept the loss and also be able to learn from the mistakes that I had. But then having to risk like a gambler, like trying to initialize the movement, that's way too crazy for me. That's why I'm like, it's easier for you to just go and look at the structure currently. Just look at the current movements and just consider the daily time frame as much as possible, because if you look at one thing for sure that I'm gonna guarantee you, right, which is crazy for me to say, but one thing for sure that I'm gonna guarantee you based off the principles of how I trade, I'll definitely tell you and solidify my words to say that the daily time frame does confirm a sell. uh, inconsiderate of how CPI will move or whatever, the daily time frame does say that sells are more stronger than buys. So if you were someone who was looking into buying, well, hopefully your targets are not even higher than the previous, are not even higher than yesterday's previous high. So that I think it's much way too far, because daily time frame on its own says that we are looking at a serious drop. So the targets that I actually have in mind, not even have in mind, according to the structure and how I trade. So we do have targets based off, I think it is 25. Let me see, the main target is 25 7 25 47 point 500, 25 47 point uh 60. That's the main target. And then taking it to like the today's target that you could possibly look into is 2586.500. So the main target for today, we're looking at around that area, 25,000 two 2025 86.500. That's the target for today. But then daily wise, then you can take it to 25 47.6 point 06. So that's what I'm actually just looking at when it comes to gold. And I haven't really like even given myself the time to look at what DXY or what's this silver uh, structure says, because one of the other correlations that you could possibly use would be silver for gold. And then and um and I think here's a small secret that I can actually just uh, give out for free for you to actually just do on yourself, do an analysis for yourself and try to confirm what uh, you are analyzing, or whatever structure that you do have on on gold, and all of those things. And we quietly know that during high impact news, uh, most definitely gold and AUD/USD, GBP/USD, and Euro/USD are most likely to go in the same direction, right? So that's one of the advantages that we do know, that during high impact news, those pairs or those instruments actually do go in the same direction, right? So now, for the fact that we do have um, the advantageous correlation on those instruments that I mentioned, so it means that now what you have to do is the following: you have to go and analyze Euro AUD, right? So here's the catch. If you take a look at the Euro AUD now, Euro AUD never, it's not even close to being affected by these major events, right? So the close look at it initially is to initially capitalize on that movement, because now, if Euro AUD is not close to being impacted by this major key high events, it means that its structure is well sustained, it's well maintained during those hours of or during that day of that specific event, right? So what you could possibly do is the simplest thing is to try and analyze Euro AUD and find the direction for that Euro AUD, because its structure might even be more clearer than gold. Actually, might be clearer than most of all those instruments that I mentioned that are going to be highly impacted by CPI. So by you analyzing Euro AUD, it gives you the edge to get the clearer structure and a clearer trading log as to where is actually price heading for Euro AUD. So when you have when you have the direction for Euro AUD, you're gonna use your advantage correlation to this point. You're gonna One thing that we do know for sure now comes in this, which comes in handy, is we definitely know that uh Euro AUD and what do you call this thing? Euro AUD and AUDUSD will never go in the same direction. One thing for sure, I'm telling you that now, that Euro AUD and AUDUSD will never go in the same direction. So if you have a clearer structure and a clearer analysis as to where price of AUDUSD is heading, then you have an idea of where AUDUSD is going, right? You just have to know that it's going to take the opposite direction. But if your analysis are contradicting, then you need to fix something. But let me move on. So now you have a clearer direction for Euro AUD. Then you have a vision for where is actually AUDUSD going to go, right? So that's why I say first you must analyze Euro AUD and never try to force the opposite direction on AUDUSD after you've analyzed Euro AUD. So you just when you analyze according to your way of analyzing, everything should just say things as they are. So like everything should just paint its own picture based off their own structure. Do not force them, right? Uh, if they contradict, then it means one of the two one is wrong. So you need to be looking at the others again. You need to redo your analysis from scratch again. But now that you have uh, those two advantage structural confirmations, a Euro AUD paving your way for AUDUSD. You're gonna use the correlation to understand where gold, GBP USD, Euro USD, USD JPY, and all of those dollar related pairs are going to go. Obviously, we do know Euro dollar related pairs, especially the code pairs, would actually go in the same direction as actually go in the opposite direction as Euro AUD, and then the base would go dollar pairs would go in the same direction as Euro AUD, right? So that would be your advantage into actually trading um, gold. You see, so I'd possibly come back after some few hours, probably during London session before CPI. You see, but otherwise, just go make sure that you analyze gold and all of those instruments for your advantage and know where it will actually CPI go based off the structural confirmations that I've given you right now. So if you definitely take that into consideration, it's gonna be easier for you to also just be able to trade the next CPI next month. So that's what I do for each and every CPI. But then if there's no clearer structure for me, then it's easier for me to stay away and look for an after trade, which is always gonna be there, right? That's why I'm like, for gold, it's easier for you to trade it because we do know that there's always gonna be the second setup that will come during New York session. If you miss the London session, then you have to just forget about what's gonna happen during New York. Simple as that. I'll go live again during London session where we have to break down the charts just a little bit more and just have an understanding of how price is actually moving at that time based on what I was saying from now on. Bless.